part of what I'm so excited about with Unification is, when I think about like the labs team, I think that like one thing that we're most unique about is like our expertise in market structure and in AMM design and protocol design. And so I'm really excited to kind of like align our focus. And that's part of what this proposal is about, building what is most valuable for the protocol.
Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another episode of Bell Curve. It's a very special episode. Today, I've got Hayden Adams of Uniswap and Jesse Walden of Variant. Guys, this is going to be a fun one. Welcome.
Great to be here.
Yeah. Thanks for having us.
Thanks, guys. Well, the trigger for this podcast was, Hayden, the proposal that you just put out to activate the Uniswap fee switch. We had a little bit of a false start yesterday. That's my bad. Montana got snowed in, so lost power. But here we are. We're back at it. And I want to get as much as we possibly can covered around. There's a whole rich history that goes along, I think, specifically with the Uniswap fee switch that I'm super interested to get at. But maybe to address what I'm really curious about, hey, maybe you could rewind the clock a couple of years ago and talk about what it was like to be running Uniswap during the Gensler years of the SEC. So I feel like that's a huge part of the subtext of this entire conversation. So yeah, kind of want to give you the just chance to address the audience. Like, what was that like? What could you do? What couldn't you do? Like, take us through what it was like.
Yeah. So, and by the way, if it's cold in Montana, we released an interesting pair of socks that you could use. Back in the day, they're still available.
What I want is the Paul Frambeau Unisocks mashup. I was actually there that night earlier, so a little part.
Yeah, the history of that. I don't know if we're going too off the rails already, but I was telling him how I really don't like long socks, so I don't wear my Unisocks because they're too long for me. And so I and then he said, why don't you just cut off the tops? I'll buy the top. And so I cut off the top of a pair of Unisocks, and he was like, "How much for it?" I'm like, "I don't know how to price like the top of a pair of my socks." And so I was like, "How about you just give me something of equal value sometime in the future, at your discretion?" And then over a year later, he comes in with this like crazy custom jacket that he made, which was really cool. Okay, I
literally bought the top.
Yeah, he bought the top of my socks. But okay, we've already gone off the rails. Okay, building during the Gensler era. Yeah, I think that like maybe some context even kind of before then. So Uniswap had this like meteoric rise in 2020. So Uniswap protocol went from doing $10 million a day in trading at the beginning of what we call DeFi summer 2020, to by the end of the summer, it was doing over $1 billion a day in trading. And that was sort of like this like crazy kind of catalyst of DeFi adoption and growth. And Uniswap was sort of like right at the heart of DeFi summer. And out of that, one of the big learnings of DeFi summer was sort of like this like interest and kind of idea of and this had already been around in crypto, but DeFi protocols that have have a form of ownership and direct participation from their communities. And that was sort of one of the learnings even out of like SushiSwap and the vampire tax. And that whole craziness, which could get its own podcast or many podcasts. And so that we launched the Uni token in the Uni token launched in September 2020. And basically just maybe 4 months later, a man named Gary Gensler was nominated to lead the SEC. And so this was sort of like right at the tail end of DeFi summer.
And we were excited about that, if you remember. We were like, hey, this guy taught a course at MIT. He's boys with Silvio Macaulay. There was excitement around that at the time.
Yeah, and I think that was sort of what made it so disappointing. What happened after, because he in theory had like the sophistication to understand the technology, but seemingly did not in how the regulations kind of unfolded, and we entered this sort of very intense period of regulation by enforcement, which was basically that the focus of the the focus of the government agency there was really often it was really about going after the good actors, not the bad ones, and going after the biggest actors and the good actors that were in the United States, and not the kind of foreign people, foreign actors that had kind of like moved abroad and were doing sort of maybe more sketchy things. And so there was sort of like, rather than going after the scammers, they were going after the legit actors. And so that was one thing that was really tough. In the sort of like earlier era, like the general understanding, like if you remember like the first, like kind of like the previous, before the Gensler era, right? The main kind of viewpoint into this that the world got was like, this speech about Ethereum and how Ethereum was sufficiently decentralized. And I think everyone understood, and the kind of common understanding was Ethereum was because of like the decentralization of the network, was like had sort of reached a level of decentralization where it wasn't a security. And I think that was like the general consensus. And I think that like, Uniswap as a protocol has always been extremely decentralized, right? At its core. It's, the smart contracts are immutable, they're not upgradable, it sort of just works and just functions. And the only way for, the Uniswap protocol to go down is for Ethereum itself to go down. And so there's like a kind of an equal level of decentralization and so that's sort of always been the case in our minds. And so that, and so we were just like, kind of like very excited for what this community governance portion of the Uniswap protocol could be, and kind of how that would work. And then I think that like, though in this Gensler era, there was a very different approach which was taken, which was anything that anyone does to create to kind of like build, like almost like anything that anyone does at all is bad. And that was sort of like, if you build and create things that are valuable, if you build and launch things, like you're not supposed to do that, and so that was sort of like the kind of the stance that was being taken, and so that was really tough. And so Uniswap Labs kind of within that era, just maybe some context. So Uniswap Labs, a company that I created that launched the Uniswap protocol. Obviously you guys know that, but and then so within that era, Uniswap Labs was basically like highly restricted in terms of how it could, in terms of like ways, like, we sort of had internal policies around like how we participate in governance, and the answer, and it was mostly like, don't. And that's a paraphrase, and so, but we're sort of like very restricted in our participation, and within that context, it was sort of like kind of like not much happening around Uniswap governance, and so. This guy Ken, who was running grants at the Ethereum Foundation before that, left the Ethereum Foundation grants and actually submitted a governance proposal to Uniswap kind of on his own to create this independent grants program to kind of like create things within the Uniswap ecosystem that was separate from Labs, that was sort of like more focused around governance, and that was really cool, and it was started to kind of like build out this ecosystem of more and more projects building on top of Uniswap and kind of helping propel that forward. And then with that kind of initial success of the grants program, Devin, who had been working at Labs, basically left Labs, joined up with Ken, and they submitted a proposal to create what's called the Uniswap Foundation, which is a new kind of independent entity, fully independent from Labs, that was meant to be focused more around the ecosystem and the governance system, and kind of that's sort of where the kind of conversation of the fee switch has happened. And so we Labs created the protocol, we deployed it, and then there's there have been fee switches from the beginning. They've always been off. Since the launch of the Uni token, they've always been one governance proposal from being turned on, and there have been attempts at that throughout history by different participants out in the world. This is one that we are putting forward with Unification, and then kind of Devin and Ken, they've been running the Uniswap grants program, the Uniswap Foundation, and the Uniswap Foundation has kind of been much more involved in the kind of historical governance proposals around the fee switch that didn't pass ultimately, but here this is a new joint proposal from Labs and the Foundation that we're really excited for. Has gotten really positive community response so far. Just passed the snapshot vote, which is sort of the last step before the full on-chain vote, with very high degree of participation. I think it's the most voted on snapshot vote, and pretty much unanimously positive. So,
and it's also the first you've put forward, right?
Yes. So part of the like kind of internal approach we took to governance is that we weren't going to put forward any proposals during that kind of previous era. But yeah, this is my first governance proposal. Technically, it's a joint proposal from Labs, or it's a joint proposal from Labs and the Foundation. And so it's been like a really cool collaborative effort. It's been really cool to see to be involved in an area of the Uniswap community that I've been at arm's distance from for a really long time. It's also just been really cool to see how positively it was received, and I've done I've been doing calls with delegates and stuff like that. And so it's been really cool to kind of see that reception.
I maybe just add like quick thing from the investor perspective. So like we invested in Uniswap Labs prior to Uni token launch, and been around from early in the journey, and like we invested in large part in Hayden and the early team, and like the people building this protocol. And so if you think about it, just zoomed out, like it's kind of an insane thing. Like we backed this team because of like their capabilities, what they built, and then they launched this thing that was really successful, had very strong product market fit prior to launching the token, which was a retroactive airdrop that was also a first. And then essentially like they just couldn't like work on the thing anymore for like 4 years basically. That's a little bit of an overstatement. But like Hayden couldn't put forward governance proposals until like a month ago. So like it's just like if you just take stock in that, it's pretty insane. Like it's so hard for a startup to capture lightning in a bottle and like find product market fit. Imagine like doing that and then being like forced to like not continue to work on that thing in the way that you want to. It doesn't make any sense.
Yeah, I think, I was recently listening to an Acquired podcast that did a great overview of the history of Microsoft, and they were getting into the weeds on the legal battle that, Bill Gates and Steve Ballmer fought back in the day. And yeah, it just was a visceral reminder for me of building a startup is hard enough, but to be fighting the government and getting sued, yeah, Hayden, my heart goes out, man. I can't even imagine.
It's been like a pretty insane journey. And like kind of even like getting through to this proposal, there was like so much things that went into it and to made it possible in the specific way that it kind of has manifested. I think sometimes something that like people underestimate is that sometimes it's like, oh, other people out in the industry do this thing and they do it this way, and so why can't you, right? If they're doing it. And I think that like something that people underestimate is that like Uniswap has been from like a brand perspective, from a name perspective, we're like the largest, most kind of like things we do get the most attention of any part of the industry. We're also like a lot of kind of DeFi projects have been launched out of like say Dubai or like another kind of region that has like a very different kind of approach here. And so I think that we've sort of always been at like the forefront of what gets the most attention, that gets the most scrutiny. We also have kind of always held ourselves to a very high standard, in part because of that, in part just because we believe in doing things the right way. And I think that like, I don't know if that's always been like rewarded. I think it's been like a challenge, but I think that ultimately, we're pretty excited that we were able to make this work in the way we did. Like an example of something that had to happen for the current proposal to exist in the way it does is like, a lot of this proposal is built on this DUNA thing, which was actually like a new type of entity that was created through a Wyoming law that was passed in the past like 2 years. And so like this required when you look at like previous fee switch proposals and kind of how the conversation went, funny enough, I actually don't have much more context than your average person in public, in the sense that like a lot of the conversations happened in the governance forum, and I wasn't even participating in those conversations with other people. But like when you follow the conversations, there were like things like you have things like A16Z saying, hey, we're worried about tax liability. We're worried about, this UkiDAO case and that, where governance participants got sued. And so, I don't know if they specifically said that, but that would be like an example of like the type of things that you're seeing in these conversations. And so like the DUNA, as an example, right, which was a new type of entity that was created just for crypto by Wyoming very recently, like, for example, was part of what, gave like, some level of like understanding around how tax would be viewed within this, what gave some level of understanding around the liability of governance participants, because and so like these things are like kind of like underestimated, and they're like, and maybe it's like, yeah, if you're like a 3-person startup running out of a country and kind of skirting the law, like that's a different situation. But Uniswap is built here, like we've been building in the US. We're trying to do it the right way, and it's been like a really interesting process. And so I think part of what's really exciting about Unification is that we're kind of like on the forefront of adopting new ways of organizing, but doing it in a way that like has some clarity around it, which is kind of like a really interesting thing, and has been a big effort.
Yeah, I think it's really well said, and I hadn't even put together what maybe one theme of just the current moment in crypto is that we've built a lot and solved some of the biggest outstanding challenges on whether that's a legal structure like DUNA, whether it's infrastructure challenges around like ETH and rollups and things like that. There's a lot that is much clearer today than it was in the past. And I want to maybe move this conversation now towards the Unification proposal that you wrote, Hayden, and maybe I'll ask you to just give us a an outline of what that is, and I want to approach this both from the perspective of you, the builder, Hayden, but also you, Jesse, the investor, and how you each look at this. And there's some really interesting questions around strategy and where Uniswap is choosing to monetize now that it's one kind of single aligned entity. So maybe Hayden, can you just start off by giving us the run of show, or what are the most critical points around the proposal?
Yeah, and technically there are still several entities involved, but I'll kind of clarify. But generally speaking, we summarize the proposal, and everyone should just read the proposal also in full if they're interested in really understanding it. But the first kind of part of the proposal is just turning on the fee switches, and I say switches because actually something that's been really interesting. People have always been like, when fee switch? There's actually like, there's Uniswap v2, there's Uniswap v3, there's Uniswap v4, there's Uniswap X has a fee switch as well, and each version of it. There's Unichain, which also has fees, and those are all going to the sequencer, but there's sort of kind of an implementation that's happening that makes it it turns it into a protocol fee and has the same burn-in mechanism. So there's kind of like a lot of different places that fees can be collected, and then each version of the Uniswap protocol has its own kind of like parameters to it. And so for v4, for example, fees are additive. For v3, they're subtractive, and there's all these things. And so part of what we're proposing is basically a model for how fees work for the Uniswap protocol. So we wrote a series of smart contracts. They have cool names like Token Jar and Fire Pit. And then we're basically, those contracts are kind of in the final stages of auditing, and will be and are we're just posted publicly actually today as we're recording, or at least the deployed versions. There were sort of public GitHub versions, but so the first one is basically kind of a system for how to use how the fee switches work, as well as turning them on. And so we're proposing turning them on initially on mainnet for v2 and v3, and then kind of expanding to through v4 and other chains, et cetera, through subsequent proposals. And then as part of that, we're also proposing how the fees are implemented, and so that includes essentially all fees are used to burn Uni, and we have the token jar contract. Basically, it just like fills up with thousands of tokens from across all different Uniswap pools, and then essentially when the jar becomes valuable enough, anyone can withdraw everything from the jar, and in exchange as long as they burn a certain amount of Uni. And so that's kind of a cool thing, and it's actually like that has some parameters to it that governance can adjust in the future, right? How big do you make the jar, right? You can almost imagine it's like a jar full of different change, and someone has to guess what it's worth, and they can but I guess you'd have to light the thing you pay on fire. But so that's so there's sort of turning on the fee switch for the protocol. There's also turning it on for Unichain. That's another thing that we're proposing, and that's pretty exciting because Unichain is the kind of only place where Uniswap protocol creates so much value for the chains on which it lives. Just in order of like, you can imagine like there were periods where it was $1 billion a year in ETH being burned just from usage of Uniswap on L1, right? And it's just like an insane number. And so having a deploy of Uniswap where as much value is internalized to the protocol as can be is really interesting. And it's not the only deploy of value. It's good having Uniswap protocol in a lot of different places, but Unichain on its own has started to become a place where certain types of pairs are being created, certain types of tokens are being traded. And so having the fees on there is also part of the proposal. Then we're actually implementing a kind of a fee. We introduced this new thing called protocol fee discount auctions. This is a really, I know you have a more technical audience, and so this one might be one where I can go a little deeper than I might on some podcasts. Protocol fee discount auction, this kind of this like very funny, beautiful thing that happened, which was there's been so many like we've thought for so long about ways to internalize some amount of MEV. It kind of speaks to like the value that Uniswap brings and sort of value in, like when you think about like a pie chart of where value flows, you have swappers, you have LPs, you have the protocol fees, you have the MEV searchers, right? You have all these different people, and generally speaking, when you want to like lower costs for users, you want to eat into the like the pie that you most want to eat into is honestly like the MEV searchers, right? Because they bring some value to the table, but they're not you don't want, like, the more value that flows to them away from swappers, for example, the worse off you are from liquidity providers. And so there's been a lot of conversations around how to improve returns for LPs and how to kind of internalize some of the MEV that's created. And there's just something so funny, like the Uniswap fee switch has been talked about for so long, and it's just something so funny that, like, the first way that we've found to do this really meaningfully on, say, Ethereum mainnet and certain other chains outside of Unichain actually requires turning on the protocol fees and then basically auctioning off the right not to pay them. There's just something very funny about that.
Interesting.
And I can kind of explain a little bit of why this works. The other kind of aspect of this thing is that when you turn on protocol fees, right, that could have an impact on swappers. It could have an impact on liquidity providers. And so when we think, pairing something with the kind of protocol fee proposal, which is kind of an idea for how to kind of bring more value to swappers and liquidity providers, felt really nice, because that's sort of like the one downside that people kind of sometimes cite around around turning on the protocol fee switch. If you want some, like, an intuition on why, like, where the gain from protocol fee discount auctions can come from, something that's really interesting is, like, LPs lose money on when the kind of concept of impermanent loss is really, it's like price divergence, right? When prices kind of diverge significantly from when someone enters a liquidity position to exits, that is sort of seen as like that's kind of like the price risk that they took on, and where they sort of are most likely to lose money to arbitrage. On the other side, there's like fees along all the chop along the way, and so they make money off of volatility and trades along the way. And essentially, when you think about what are protocol, like, swapping fees are actually like kind of like they actually get in the way of arbitrage, right? Because, like, the bigger the swap fee, the smaller price movements become less profitable to arbitrage. And so it kind of like, the bigger the protocol fee, the less arb you have along the way, because you can't make these small little arb trades. By kind of turning on the protocol fees, you sort of like shrink that. Like, if LP fees are 30 bips and protocol fees are 0, and then you have LP fees are now 25 bips and protocol fees are 5, you can kind of by auctioning off the right to ignore the 5, you can actually make arbitrage trades to within 25 bips instead of 30. And so one way to kind of think about it is that, like, you're sort of like allowing for more and smaller arbitrage trade along the way, which can improve LP profits. And then you're sort of ultimately, like, auctioning off the right to kind of not be doing and then, like, the sort of auction is the auction to not pay that fee is sort of how the value ultimately still flows how the fees still kind of flow to the burn contracts. So it's a really, like, interesting, clever design. It's also like a kind of a interesting design space and requires lots of thinking and parameterization and exploration in the future. And so we're sort of we're working on kind of an initial implementation of that. But it's a really cool design space, and has a lot of potential.
Can I just say, like, this is the type of thing that, like, this kind of research, like, should have been happening all along, right? Like, in theory, right? Like, if not for Gensler saying, like, oh, you can't touch the protocol at all, let alone, like, turn on fees, like, have a token that accrues fees. But it's like what you just outlined, I think, is, like, a really, as you just said, like, exciting domain of research and further work for the protocol to do. Like, it's an exciting proposal, and there's more work to do there. So, like, that's all possible now. That's amazing. I just wanted to note that.
Yeah, it kind of highlights maybe, like, an area of the proposal that we were going to get to, which is, like, the unification, which is, like, Labs' focus, right? Like, we've been focusing, in this sort of era that we were in, we kind of had to have a business model that would let us continue to ship and build things. And if we're not allowed to kind of touch the protocol much, then we are at least, allowed to build products on top of it. And so that was sort of what our focus has been. But I think when it comes to, like, how I think of, part of what I'm so excited about with unification is, when I think about, like, the Labs team, I think that we can do, like, we're like, the thing, like, one thing that we're most unique about is, like, our expertise in market structure and in AMM design and protocol design. And so I'm really excited to kind of, like, align our focus, and that's part of what this proposal is about, around building building what is most valuable for the protocol. Part of what is kind of coming in this proposal is, like, an acknowledgement or a thinking that, like, the way that we can create the most value for the world as Uniswap Labs is to make Uniswap protocol, right, this sort of like universal exchange for value. It's not about having our interfaces be the biggest interfaces on Earth. And I think that there's a lot of things that our interfaces can do to kind of grow and build value for the protocol, and it's something we are continuing to invest in. But from like a kind of like a what is like the top line metric that we're tracking? I don't want that to be like fees in our front end. I want it to be usage of the Uniswap protocol, and because there's so much we can do to kind of empower and build for both for ourselves, but also for other people building around Uniswap. And that's kind of like, a big kind of idea behind this proposal.
Yeah, I'm curious to unpack that, because I think one of the biggest decisions or most interesting parts of your proposal, Hayden, was the decision to turn off fees on the front end while you're activating it on the protocol. And I think one of the criticisms, fair or not, about Uniswap for years was that there's this misalignment of incentives between equity holders of the labs entity and then the token holders of the protocol. Now, my commentary would be that's probably reflective of the unfair years of Gensler, right, and the limitations around what you could do there. And now it's probably evidence. I don't want to put words in your mouth, that now that those years are over, right, that you've kind of put this very elegant proposal together to align these distinct entities' incentives. And so I want to actually maybe get your quick perspective on that. But then, Jesse, you had a great post, like early investor in Uniswap, and have been very keyed in contributor. And you had a great post having to do with kind of commoditizing complement for companies that are building both protocols and products. So maybe, Hayden, a quick word on just like note of unification here and whether or not this kind of solves some of that historical criticism. And then, Jesse, can we get to your kind of thoughts on the strategy here of if you're a company that's creating both a product and a protocol?
Yeah. I have a few thoughts here. I think one thing to start with, so I can tell you like how we thought about it, like how I thought about it internally, like, because we were restricted in certain things, and the way I thought about it, but we still like, throughout that, even during that period, right, we built Uniswap v4, we built Unichain. We also built Uniswap v3, which is the most used trading protocol in our spot trading protocol in crypto history, all during that period. And I think the way that we kind of talked about it and thought about it internally was like, well, we can't do certain things, but the Uniswap protocol is critical infrastructure for the products that we're building. It's critical to the brand. It's critical, our products don't work if the protocol isn't what it is and it isn't able to be improved. And so we kind of like, you can almost imagine like from a like justification to internal equity holders or whatever, like it's almost like it's like almost like an infrastructure cost, or it's like a brand building, and like and I think it's also just like because we were really excited about it, and so we continued to do it. But like when you think about the kind of like part of building an organization, part of building, like you want like there's like momentum, and there's like you want, and people want to think, feel like they're building what they're building for, like drives value, or like what they're building for kind of like and so I think that like I don't think that like I don't have issue. I think front end fees are like fine. Like I think that the front ends are a product on top of the protocol. It is like reasonable to charge for them, and I think that like this, but I think with this proposal, part of what we wanted to make clear was that like we wanted to make it clear that like our full focus is on the protocol. And so I think that like by having them on, like I don't think it's bad for them to be on, but by having them on, I think it like just leads to like one, it leads to like questions around the focus, like okay, like we have to think about like the revenue separately from the interface, from our service provider relationship to the DAO, which is part of this broader proposal. We didn't want that like split focus or even like perception of it, and we wanted to kind of like go all in around this. And then I think separately, like I'll say that like also, and kind of maybe does get at the commoditized complement stuff, and I have like things I mostly like that framing. I think there's a few things I'll maybe I'm curious how Jesse replies to it, but I think that like I think sometimes like the phrase commoditize your complement kind of implies a little bit of like almost like brutal, like we'll like anyone, like we're gonna like completely compete anyone building on top of the protocol to zero, which is really not our goal. I think that like having, and I don't think that's your goal either, Jesse. I'm just saying that like we want to like empower all the people building on top of the protocol. Like a lot of why we want to focus on the protocol is to like help all the people building hooks, to help all the developers that are creating businesses on top of the protocol, even the other interfaces. And if you build a really good interface, a really really loyal user base that trades through the Uniswap protocol, and you charge fees, we're happy for you. We support you. We want that to happen. when I think about like our role as labs, part of the point of this proposal is like, having having our distribution act as a growth, as a thing that drives volume for the protocol. I think it's valuable for the protocol. I think it's part of I think that we want like it's like kind of like the strategy we want to adopt for our products because of our unique positioning. The goal isn't to like kind of like drive everything to zero, but I think like something that's really interesting is like, for example, we're making our trading API free. We're also making like a self-serve portal where people will be able to provision their own keys. So anyone developer that's building on top of the protocol will have access to all the same routing that we do in our front end. Kind of like for free, they can build their own front ends on top of it. So we're excited about that as a way to kind of like expand access to more developers and create more volume, and that's kind of like why we're most excited to do it. And the goal isn't to just like kind of like ruthlessly outcompete other front ends.
Yeah. And maybe Jesse, I'd love to get your take here as well, because commoditize your complement is kind of this classic strategy that you often hear from maybe more of the investor side of things as well, even then sometimes the builder is I think Hayden, you kind of articulated it from the intuitive standpoint, but Jesse, can you kind of but maybe to zoom out a little bit actually as well, could you just give from your perspective, when you see a company that's building both a product and a protocol? I think I know we love a semantic argument on CT, but I think that is a really important distinction, and there are different considerations if you're a company that's kind of there's an added layer of complexity. So Jesse, could you just tell us how you've historically thought about this, outline what we mean when we say commoditize your complement, and then maybe how that applies or how you've historically thought about it within the context of Uniswap?
By the way, there's one thing I quickly forgot to say. I'll be very quick.
Yeah.
I also want to just mention there's a few things that like we haven't been able to prioritize in our front end because it doesn't fit within our business model very well, and that we're now going to be able to prioritize. For an example, like all our revenue came from swapping fees, and so every kind of quarter, as we like are figuring out what project do we pick up next, like there's so many liquidity provider features. Our front end actually has like much greater market share for liquidity provision than it does for swapping, because swapping is like the bigger like revenue generator. But like Uniswap Labs now, with this sort of like new setup where we're focused on protocol, growth and stuff like that, we're now able to kind of like invest really heavily into the like LP tools and the LP UI, and even like having API access to the LP. Right now our trading API is only for swapping, but we can have API based liquidity provision. So like all these things become a bigger focus. So part of it is also just allowing us to focus on the things that other people might not be. But
right. Change the incentives and change the outcome. And like, okay, so the first thing I'd say, your question is like, product and protocol, equity versus token. Everything I'm about to say is actually entirely inspired by Uniswap in the early days. So like, Hayden deserves all the credit for all the thinking here, which is like, if you rewind to the very beginning of Uniswap, Hayden did two things. He invented the Uniswap protocol, and then he also built the first front end interface on top. And like Cal, who's I think the first hire, like he was an amazing designer, like built this really buttery smooth interface that made using an AMM super easy. Like an AMM is not like, if you go in like the white paper XY = K, I mean it's very elegant, but it's like not intuitive to most people. And then yet like the Uniswap front end interface like just was this buttery experience of like one token to another. It was like a vending machine. And so what worked really well at that time was build this amazing product on top of this really innovative protocol. And back then there were no front end fees, right? Like you gave away the product for free in the very early days. And the result was like, product solved a problem for people, had product market fit, bootstrapped liquidity in the underlying protocol, right? And today, as Hayden just mentioned, like the Uniswap Labs front end is not dominant in terms of market share. In fact, like a lot of the flow going through the protocol is coming from third parties. The reason third parties have integrated the protocol is because the protocol is the most liquid venue to trade a lot of these assets. And so like the strategy that I think Uniswap elucidated and many others have successfully followed is like, if you're building a novel protocol, you also need to go and build the first product on top, make sure that product solves a problem for users, and use that product to bootstrap the network effects on the underlying protocol. So like that's what Uniswap did at the outset, and I think that's a lot of the inspiration. for this the strategy that I'm about to outline. The other input for me, apart from looking at Uniswap, was also reading Joel Spolsky's 2002 essay on commoditizing the complement. Joel Spolsky is a software engineer. He's the founder of Stack Overflow. And he like sort of goes through the rich history of companies commoditizing their complement in order to grow their core business. And so like the key idea of commoditizing the complement is like cereal and milk are complements. If you're in the business of selling cereal, you want to make milk free. If milk is free, people are going to buy way more cereal. In computers, there's like many examples of this, right? Like if you're in the operating system business, if you're Microsoft, you want like the hardware to basically be free. You want people to be able to buy computers that require operating systems for very low cost. So you want to invest in making computers as cheap as possible. And this is why Hayden is saying it sounds kind of like brutal competition, right? Because very often it's using you're trying to like undermine your competitors in order to drive the core business. I think it's actually very different in the case of decentralized protocols, and that's why this strategy works even better in this context. So the key difference in crypto is like this game can be much more positive sum, and that's because like the underlying protocol is permissionless, decentralized, like can't rug you, and you can own a piece of it. So like I think in the case of Uniswap today, right, where the front end is now going to be free, Hayden can and team can focus on like making that product much more useful in ways like focusing more on the LP experience, for example. Third parties can still integrate the underlying protocol, and like they can own a piece of the token or a piece of the network that they're integrating by virtue of buying the token, and that token is going to accrue fees or accrue value if the protocol or the proposal passes, right? So like by integrating and driving value to the protocol, you can participate in the upside of the value you're generating. And one possibility is that you might imagine that like protocols start to reward third-party interfaces that do this integration with some of the value they're creating by way of giving them tokens as a function of how much value they're driving. So that's why in the crypto context, building a product, giving it away for free, it makes a lot more sense because you own a piece of the underlying thing that you're building on top of and driving value to. And so it can be very positive sum and a tide to raise all boats. So that's the opportunity I've always seen in that's kind of unique to crypto protocols is like these protocols can make their users owners. Owners can benefit from economic alignment with growth. And what drives growth is building products on top, that are more commoditized, that give away some of the value that they're creating in order to drive growth in the underlying thing. So that's like what Uniswap started to do. It's what they were restrained from doing, I think, during the Gensler era. It's what this proposal proposes to do now. And I think many other teams can and should follow the same playbook of, build the product on top of the protocol, commoditize the product. It is the complement for the protocol. The protocol can ultimately be way bigger than any single product because it drives third-party integrations.
Yeah, I think that's like a fascinating strategy and completely follow now we all think of Uniswap and we know exactly what it looks like and how to use it. But when you were going back in the initial days, translating, that initial XY equals K into something that actually is a nice product was really challenging. And so it's super cool to have seen that strategy play out. I'm curious, Hayden, so in theory, this sounds great. I'm curious about what some of the logistical challenges might have been with this. Like, was it difficult to tell your investors, hey, I know we're making $150 million a year, but we're going to turn this off? And also, I know that even though like the purpose of this is to unify the different stakeholders within the Uniswap ecosystem, but if I was an equity holder in Labs, I'm sure you got a lot of questions about this. So can you just walk us through like how did you, or maybe these are still open questions, TBD based on if the proposal passes, but yeah, like I guess what were some of the maybe more practical logistical questions of making a change like this?
Yeah, actually, I'll hop back to that in 10 seconds. I want to actually quickly riff for a second on this like design, like just like the design and like even the Cal's work and like how we like. I think part of why Uniswap, I don't think Uniswap would have been nearly as successful if we hadn't nailed that first interface. And I think the reason we got there was really funny because it was like because of like AMMs were so different from order books, we were like very worried people wouldn't understand them, and we were so paranoid about it. We spent so much time trying to like design a usable we're so worried that it would be confusing that we ended up designing something that was like radically simpler that than even like existing, like order books have been around for like, forever, right? And they like, and yet the thing that we designed on top of AMMs was like easy to use in an order book. And so there was just like this funny thing, which is like we leapfrogged by being paranoid that it was going to be hard to use. And sort of like, the like the current swap UI is like iconic and everyone uses it. But like that was like even like the first hire I ever made, or one of the first 2 hires was this guy Cal, and he's just like a total design genius, and it was a big part of the creation of Uniswap's brand and this like UI that's been forked I think 5,000 times now, is something like that, just on GitHub at least. Anyway, crazy. Okay, on the investor alignment piece, like I think that something that was really helpful here is that the majority of my investors, right, have been like around for a long time. Most of them are also like stakeholders in the broader Uniswap ecosystem. There's not like a perfect mapping, but like but I'd say that generally speaking, the kind of investor group has been pretty supportive. And I think that like I think that for me, I believe that we should have upside in a world where the community also like we want to kind of like we want to make this system work, and I think that requires sometimes taking risk, that requires sometimes like doing things different. And so yes, like front end fees were like a stable business, but I think that like one of the biggest jobs of a CEO, and I've been learning this on the job as I go, is like almost like thinking about like there's sort of like local maxima. There's like the local it's like avoiding like the local maxima trap where like something feels like safe and stable, and so you just do that forever. Versus like thinking about like the bigger opportunities and how you kind of traverse to them. And so I think that like to me like the big opportunity of Uniswap is like the Uniswap protocol success. And so I want to kind of like align our upside to like making the protocol successful and not just these front end products. And so like I think that's like, and I think that like I think we're fortunate to have an investor set that understands that. And so like it was definitely like a process. The whole like when you talk about like trials of getting here, like again, some of it required like new laws to be created that we adopted as like it wasn't like this isn't like, yes, it hasn't been easy, but I think that like the lab's investor set is excited by the direction we're going with Unification.
I mean, I'm happy to share my perspective as a lab's investor, which is that in my view, like this is how it sort of always should have been, right? Like the thing that we really invested in again was like Hayden and what they built with the protocol and the product on top. But I think at the time that we invested, the product on top wasn't being monetized. The expectation was all the values in this in the protocol, and the thesis was all the world's value is going to get tokenized. All that value is going to need a place to be exchanged, and Uniswap protocol is the exchange, right? Like it functionally is the exchange, the protocol, right? And there's going to be many products on top, but the protocol will be the kind of canonical center of all that liquidity. And so, this is like, in my view, this is like what we invested in, and so it's a no brainer for me that this is like the right North Star and like bigger outcome in the long run.
What is the plan for, and I think you've outlined some of this in your post, Hayden, but the plans for funding labs going forward? So
the by the way, the proposal includes a kind of like a growth fund from the Treasury that labs will be that will fund a lot of the development here. So that is part of this proposal. And so I think that like for now we're going to be kind of building and we're going to be kind of building for the protocol, and we're going to be funded through the Treasury.
Nice. Okay. Well, maybe last question for you. Well, actually, I'd love to maybe turn to.
By the way, actually, one thing I'll maybe say on that that's kind of interesting and also novel here, just a slight nerd snipe on this like broader DUNA thing that we've been talking about. Like, one thing the DUNA has like clarity around tax, it has clarity around like liability. The other thing that it does is it actually creates like it almost allows like the DAO itself to like have, or governance itself to have like contractual relationships and stuff like that. And so, so part of this proposal include, as part of this like creation of the growth fund, et cetera, like includes like a service provider and contractual relationship between us and the DAO. and the Uniswap governance through the DUNA, and that includes like aligning our interests, and so there's something just like interesting there and kind of like novel. I don't know if it's even ever been done before. So kind of
like what I would overlay to this, couple of things I'd overlay to this. So first of all, is I think like we talked earlier about the only guidance pre-Gensler was sufficient decentralization. Ethereum is sufficiently decentralized because it's there's no one party that controls it, whatever. I think what we learned through the era of DAOs back in like 2021, when there was tons of experimentation going on, is like too much decentralization. It's really hard for a startup to operate under, because you need to make forward progress, and decision by committee is like kind of a slow grind, and so this proposal I think like lands in a very sweet spot where you still have governance, you still have like the token holders, but you also have this service provider relationship that codifies like how Uniswap Labs can be incentive aligned with all the token holders. And so the result is that like kind of checks and balance system where like Uniswap Labs has a CEO, right, has a team that is like focused on a number on North Stars, has to deliver, and in order to continue to exist, it's a capitalist incentive, right? And then ultimately there's like the accountability to token holders. So I think that's like a new thing that just in the broad arc of like DAO experimentation, I think we finally landed on something that makes sense. Like you like we swung too far towards like total decentralization, flat decision making. Like that, in my view, just doesn't work, because startups need leadership, and now we have leadership.
Yeah, the one thing I want to like add, the only other nuance I want to add to that story there is like there's like also different things that are like, just because sometimes I'm very used to people misinterpreting what I say, and so just like the protocol itself also is like sometimes people also kind of like conflate like decentralization of governance and then like the protocol itself, right? The protocol itself is like immutable smart contracts, and it's kind of like automatically works. It automatically burns fees as part of and I think it's really like around like specific, like governance is like very limited to specific parameters, and then but then to the point on like development, like we're like a software development firm, and like I don't think that like token holders shouldn't be like voting on day-to-day technical decisions from a software development firm, and so having this like explicit service provider relationship lets us kind of do what we do best, while ultimately to Jesse's point, there's like accountability to the DAO, but like even even like an evil DAO and an evil service provider actually would still the Uniswap protocol, like part of what's actually most beautiful to me is that like the token holders could go. Imagine if like all like token governance and labs were both horrible, like Uniswap would still survive, because the protocol itself doesn't ultimately rely on either of these entities to continue to function, right? And so like a lot of what we're doing is building things for the future, but maybe the most beautiful part of the decentralization is the like immutable smart contracts and kind of like the sort of almost like limited nature of the things that we're even talking about here.
Right. Final question for you on the proposal, and then I want to turn to the future. Sorry, actually, two real quick questions that I know conscious of time here. One, I saw there was a retroactive token burn, and so I would love both the builder and the investor perspective here. How did you arrive at the number of tokens that you did for that, Hayden? And then I would love to understand, how you think about value accrual here, and maybe Jesse, you could talk a little bit about how you feel about token burns from like a number go up perspective.
So from a like in terms, I mean, we kind of mentioned this in the proposal, but like it was sort of symbolic, I guess, and so we did some data work to estimate. The idea was we're coming out of this like crazy era. There was like, so there had been so much, like part of what happened though over the past 4 years, it's not just like us fighting legal battles. There was also like a community sentiment thing that happened, which was like a lot of frustration over a long time. People like not everyone like understood what was happening. Not everyone had full context. People, a lot of people expressed, out in the Uniswap community, I'd say, and outside, out in the crypto community, had like kind of like long expressed like, a wish that the protocol fees had been turned on earlier. And like Uniswap protocol did $4 trillion in trading during the period where the fee switch was off, which is like a mind-boggling number. And people were like, okay, well, and like part of what we were trying to do with Unification, we're trying to like address all, we're almost going through like, what are people's complaints? Let's hit every single one of them. And this one was kind of like, a symbolic nod to like wishing it had been turned on earlier. And the number 100 million, like we ran different data queries on like how many, and it's like honestly like there's like a lot, it's debatable on how you parameterize it, but like they kind of came out in the range of like 100 million uni. It kind of depends on the exact period, like the exact levels. Like there's no perfect number, and you can't like retroactively perfectly calculate. But the idea, and the other thing that's kind of like was funny and fun for me about this was like we're sort of like Uniswap like pioneered the retroactive airdrop, and so like there's sort of people are used to like Uniswap surprising, or like not used to. It's almost like we've surprised with like a retroactive thing in the past, and when we did the Uni airdrop, like no, it hadn't really been done in the way that we'd done it, and it kind of really kickstarted this as almost a broader industry phenomenon. And so like I thought, we just kind of thought it was like a nice nod and a nice symbolic thing to kind of do this in this way in this moment. Let's just burn from the treasury the equivalent amount of uni that would have been burned symbolically.
Love it.
Yeah, my 2 cents on like, I guess the investor perspective here is like I think it's great, especially for a mature protocol like Uniswap, and yet I also think that crypto trader writ large is too myopically focused on fees and burning tokens. Given that like most protocols are not as mature as Uniswap, and like they they're high growth startups. Like high growth startups need to be profitable, but they generally are not distributing dividends to token holders. Not that burn is exactly the same thing, but still, it's I think it's a little bit of a myopic focus, and like all of crypto Twitter, I think would do a lot better to focus on how do we grow the pie like many orders of magnitude bigger in terms of adoption and usage before we focus on making number go up in a kind of like more forced artificial way.
Final question here is I'm curious about the role of labs, and maybe this will sound like a little bit of a silly comparison immediately, but proponents of DATs have kind of argued over time that like a labs, it could be kind of like if a labs entity was a public company. And so I'm going to ask a question that you probably can't answer, Hayden, but is there a chance that you could ever see labs transitioning to something like a DAT or going public? And then, Jesse, I guess Hayden to ask you that question, then Jesse, maybe you can give you the closing word here.
Yeah, I can share some thoughts. I think I'll start by saying like our focus and our focus right now is like this unification structure, making it work, building for the protocol, through the service provider relationship. And I think like going public, like especially right now, would be like a massive distraction to that. It would also be like a massive confusion to this this unification story. So like that's certainly not like our focus or area. In terms of like I also say like Uniswap Labs is pretty different from a DAT in terms of like DATs tend to what they're really essentially doing is like buying raising money, buying a ton of tokens, and then but the flip side is a lot of DATs do have stories for how they contribute. They want to create value for the protocols that they're building on. So yeah, I think that like the only way that I would be excited to kind of do something in that direction would be if I felt like it really like contributed to this alignment story and was like really additive to it. To me, it would feel like a distraction to do this right now. So yeah, I think that like again, and then I think that like I don't know, a lot of the ways that DATs have seemed to have manifested have been a lot more like kind of like short term vibes, like kind of sort of like falling into this like myopic thinking category versus like things we want to do right, we want to kind of think really long term about. I think there's like a lot of different paths for how to think about labs, and if there was sort of like a really good very like kind of like ecosystem aligned way to do something that everyone thought was best that would bring then we might do it, but like that would have to I don't have, there's no like secret kind of plan here, there's no I think it would have to like really make sense, and it's certainly not our focus right now.
Yeah, I guess I agree with everything Hayden said in terms of like sequence of priority. I think but like a simple mental model for people who are still, I guess, like working through unification itself and the proposal is like, I think the key idea here is that Labs is an equity entity whose primary sort of value accrual mechanism now, today, or if the proposal passes, is like Uni on the balance sheet. And like, that's great if you want alignment between like Labs and Hayden, all the like smart people work at Labs working on the thing that you also own, which is the Uni token. And so like, if you think about what a DAT is. It is an equity entity that is like, primary value accrual mechanism is tokens per share, right? Tokens on the balance sheet. So like there is that similarity. Obviously, both stats are not like full of the founders of the protocols are not at the DAT. So that's one key difference here. And like most stats are not shipping new versions of the protocol. That's another key difference here. So like there are similarities and there's differences, but I think many of the DATs that like don't have any kind of like functional value to add to the ecosystems they're in, like may not last very long. Like the ones that stick around will probably have to find a way to do that in order to stand out in the market. So I think like if DATs continue to exist in 3-4 years, which I think they will, like they will look very different than they look currently. They might look more like operating companies that actually do things that contribute value. They might look more like what Uniswap Labs looks like today, which is a company full of smart people building for the ecosystem and accruing value for doing that. The same instrument that everyone else can hold.
Yeah, right now DATs are kind of like very, like I think my understanding, I'm not that deep on DATs, but it's just like people are like want like very low operating costs, because you're kind of like minimizing, like it's people just want like exposure to to the underlying tokens essentially, in a lot of these DATs, and so that wouldn't be a model that would make sense here,
Right.
if people were viewing it that way.
Okay, last 30-second flash round question. One thing that I think is symbolically interesting about this fee switch proposal, were it to go through, is people have always looked at this as sort of the Uniswap fee switch as a bellwether for kind of token value accrual. And I guess if you guys had to predict, is this like the bottom in, I don't know, alts, token value accrual, take your pick? And would you expect more fee switches to come after this? Maybe Hayden go first and then Jesse.
I think that like it seems to be true that the things that we do are copied or kind of standard in the industry, in the sense that like we did this airdrop and then suddenly everyone was doing airdrops. We our protocol has been forked 5,000 times. Our front end has been forked 5,000 times at least. There's like people do seem to are kind of like interfaces set standards for how people do interfaces. Like it does seem to be the case that people look to us. And I think that like I'm very excited about destruction for us, and so if it kind of inspires other people to lean into crypto nativity, to lean into protocol growth, I'm very excited. I would be very happy to see that. I don't know generally, but like I for the same reasons that I believe this is the right direction for us, I think that like it is like often the right direction for others, and so I would be excited to see it become a trend. I have no idea though.
I think the thing that I'm most excited about here is that like if this works, it'll prove like a really big point, which is that the protocol growth as the North Star focus is how you actually create way more value, right, than any single product can create. And so what that would mean is if like the industry follows that, is like the protocols are growing many orders of magnitude bigger in terms of usage and adoption and integrations and so on. And like we're starting to see that play out across DeFi. Like we're starting to see way more, the DeFi mullet thesis is playing out. Like protocols are getting integrated into way more front ends. And as a result, like the protocols themselves are probably going to, be controlling way more value, way more TVL over time. So like that's super exciting. And I would expect like as, this gets proven out, like more people will follow that strategy. That there was a second part of your question I forgot, but
I think that was, you basically got the gist of it there. I have a horrible habit of asking 3-part questions, so if you knock out the main part, that's good enough for me. Jesse, Hayden, this has been a ton of fun, guys. I want to be respectful of your time here, but yeah, we'll have to do this again sometime soon, and we'll link, by the way, the proposal in the show notes if anyone wants to go check it out. And then guys, quick plug for yourselves if folks want to follow you on Twitter, or I don't know, find more out about you. What's the best way to do that?
I guess you could follow at Uniswap on Twitter. You could follow at Hayden Z Adams on Twitter. I'm usually on Twitter.
Nice.
Variant fun.
Oh yeah,
indeed. Not fun.
But it is fun, and it's a fun. All right, guys, I really appreciate the time. This was a ton of fun. We'll have to do it again sometime soon.
Yeah,
Thanks so much.